Every WhatsApp message you send, every UPI payment you make, every Instagram story you swipe, every IPL match you watch, every time you binge on OTT or get an AI response from ChatGPT or other AIs, it all creates billions of data points every single second. But have you ever wondered how this data is stored, how it is managed, processed, and safely secured? Well, the answer is data centers, the digital factories of the 21st century. And the companies building this backbone could be India's next multibaggers. So let's dive into this invisible yet unstoppable mega trend and the stocks that are powering it. So first let's understand what is a data center. So data center, as the name suggests, is a place where data is stored. Now what is data? Now data can be your emails, your UPI transactions, your WhatsApp messages you send, the photos on your Google account, all of this that is stored digitally or everything that happens on the internet is basically data, and the place where it is stored, managed and processed is called as a data center. Now that we understand what a data center is, let's briefly understand what are the demand or the growth drivers for this industry. So first is AI explosion. Now every AI query that you make on ChatGPT or any other AI models that requires huge data retrieval and huge data storage. So OpenAI's ChatGPT and other similar models need massive computing power, due to which there is a need of data centers. And the second is your data privacy laws, and the RBI and Government of India mandate storage of financial and sensitive data within India. So let's say your bank account details, they were previously stored in Amazon data centers in the US, but now it is mandatory that all the Indian citizens' data must be stored within data, which will further boost Indian data centers. Next is the China plus one shift. All the global hyperscalers and MNCs, they are reducing Chinese exposure and setting up data centers in India. Next is the data consumption, and it is estimated that India will have 900 million internet users by 2026, and the data center usage arises with OTT, UPI, e-commerce, cloud, and Internet of Things. Next is the CAPEX boom, and over 1.2 lakh crore is planned for the next 5 years for CAPEX in the data centers. Now let's understand some CAPEX that is being done. So first is the Adani Connect X, which is a subsidiary of Adani. It is investing 10,000 crores to build 1 gigawatt capacity by 2023. Next is the Hiranandani Group. It is building Asia's largest, like the continent ka largest data center in Navi Mumbai, which will have 50,000 plus racks. Next, Reliance Jio, it is also tying up with Microsoft for Azure-based services, and multiple data centers are coming up. Next is government push, data localization policies as we talked, and government is also targeting 200 plus new data centers by 2027. And why now? As we know, explosion of AI, 5G, OTT usage, EV infra, smart cities, cloud services, India's strategic push under the Digital India plus China plus one. These are just some of the few reasons why data center can be a good bet. Now let's understand the anatomy or the cost structure of a data center. So if you look at it, 17.5% is for land and building cost. The next 22.5% is the electrical infrastructure cost, that is your wires and cables, UPS. Next, cooling systems is 22.5%, and then IT equipment is 27.5%, and then backup systems, that is your gensets, that is 12.5%. Next, let's look at some of the companies that are engaged in data centers and its allied products. So the first company that we have is Anant Raj, and Anant Raj is a real estate business company that is also building data centers. So the company has two main businesses. First is the residential business that includes your residential projects, affordable housing projects, all that. And next is the annuity business that contains data centers, IT parks, hotels, and the business that we're going to cover today. So the business model is that it primarily involves building and leasing data centers to data center facilities to hyperscalers and MNCs. So what it does is basically it builds data centers for other companies, but it doesn't actually operate the data center on its own. It basically leases it to companies like Microsoft, AWS, Google, all these companies, so that they can operate the data centers. And the competitive edge is that Anant Raj is the leader ownership of large land bank. It has a very large land bank of close to 80-85 acres in Delhi NCR. Currently, they have 30 megawatt capacity data center in Manesar, demonstrating commitment to the growing sector. The company is proposing to scale up its data center capacity to 307 megawatts within 5 to 6 years. The next company that we have is Blackbox Limited, and Blackbox Limited, it is a global IT infrastructure player providing comprehensive data center solutions. So So if I have to divide it, company has two main divisions. First is the system integration that has your data centers and edge IT, cybersecurity, digital solutions, and second is the technological products, that is the IT infra, specialization networks, networking, etc. But we will only focus on system integration. And even if you look at it clientele, it has good clientele like Bank of America, Intel, Dell, Deloitte, TCS, HCL, Bloomberg, and all these big companies. And a business model of the company is such that it focuses on large deals, more stickier deals, and heavy client concentration, and it has a very high exposure to North America. Now, what does Blackbox do? Blackbox basically designs and builds the entire data centers from scratch. So they charge one-time fee for building the data servers and the regular income for maintaining the data centers. And recently Q4 results also came out, and its order wins were at 1500 crores, which is the highest in FY25. And its order book for FY25 closing is 4362 crores. And a majority of its orders are multi-year, high-value contracts for hyperscalers, healthcare, airports, education. And another interesting thing that is happening in the company is that transitioning from smaller, low-margin businesses to larger, stickier, and more profitable businesses agreements. And the repetitive annuity business or the AMC business, it is around 30% of the business, and its plan is to move it to around 40% short term and 50% of the business by FY28 and 29, because this is a more stickier business and has higher margins as compared to the main business. And the next company that we have is Aurionpro Solutions. And Aurionpro Solutions is a key player in both infrastructure and fintech, actively building data center parks. And a business model of the company is that it has a partner-based model. So the operational model is partner-based, focusing on build, operate, and lease agreements. So basically, they will help the so they will enter into joint venture, build data centers, operate, and then lease it to other hyperscalers. And then it has a very high BFSI clientele. So company has two main divisions. First is the banking and fintech, and second is the TIG, that is the technological innovation group. So banking and fintech mein management commentary is that management is seeing strong traction in transaction banking, lending, and interact product designs. 42 new clients have been added during FY25, and TIG made major wins in transit, notably Delhi Metro, Chennai Metro, and a healthy pipeline in both India as well as overseas. And the data center and hybrid cloud business is seeing strong demand, and this is the management's word, more demand than anyone can meet. This also you can use as a confluence to add to the data center demand. So the order book of the company is around 1400 crores, which is a growth of 40% year on year, and the company has execution cycle of 4 to 6 quarters. And the next company that we have is E2E Networks. This is one of the biggest companies in the data center business. And what the company does, the company is a IaaS company, that is infrastructure as a service provider, providing cloud compute service. So what it does is basically, for example, a clientele of the company is Zomato. So for example, if Zomato wants to place an order, Zomato wants to store your information, Zomato wants to store the menu cards, all the data that is available on Zomato app is stored on E2E Networks data centers, and company uses data centers to compute its services. So company basically competes with hyperscalers, directly compete with major players like AWS, particularly targeting startups with their cloud offerings. And clientele of the company is Zomato, Nykaa, Zoomcar, Cardtrade, and all these big companies. And what it is, the key competitive edge is being an India-focused alternative to global giants like AWS and Azure. And rapid growth, E2E Networks is experiencing rapid growth, especially in AI-based cloud services. Right, so what E2E is also partnership with Nvidia for the GPU infrastructure. Then it has partnerships with Intel and AMD for CPU infrastructure. And recently company also has a collaboration with L&T for providing access to enterprise or government channels and global reach, especially for the sovereign cloud platform. And L&T is also considered company's largest partner. And now E2 is also targeting AI startups, enterprises, education institutions, and government initiatives, and focus is shifting from small startup customers which use around 8 to 64 GPUs to larger enterprises and governments which use around 64 to 512 plus GPU clusters. Next company that we have is Netweb Technologies. So what Netweb Technology does, it designs, develops, and integrates high performance computing solutions, or basically supercomputers. And a significant edge for Netweb is their status as one of India's few OEMs providing a unique position in the market. And also, the business model revolves around product sales to various sectors, including government entities like IITs, hyperscalers, and defense organizations. And what company offers is company offers high performance computing, that is supercomputers, high performance storage. Next, it also provides private cloud and hyperconverged infrastructure, and also it provides data center servers as well as software and services for its HCS, that is high computing storage. So the next company that we have is Techno Electric and Engineering. And Techno Electric, this is a business that we covered in the past as well. So make sure to check out that video. Techno Electric is what? Techno Electric is basically an EPC company. So Techno Electric, that is, as we discussed in the last video as well, it is a power T&D company. It is a data center company as well. So if you're looking to play both sectors, Techno Electric can be a good choice. So it is involved in building data centers, infrastructure, as well as it operates its own data centers. So its business model is similar to Anant Raj, whereas where it builds data centers as well as leases it and then operates some of its own. Dual model, the business model combines EPC with annuity income generated from the captive data centers, and the competitive edge is that company benefits from strong order book and possesses unique expertise in data centers, setting them apart in the industry. And you guys can also refer to the results of the company. Company also posted stellar performance in the recent quarter, and that was reflected in its price as well. And Techno Electric, it is building a data center in collaboration with Railtel for a 10 megawatt data center on a revenue sharing basis for a 30 years tenure. So I hope you guys are liking the video so far. If you're liking the video so far, make sure to drop a comment below and also like and subscribe the channel for more such upcoming informative videos. So now let's briefly discuss the data center proxies. Well, actually data center proxies that demands a separate video on its own, but in today's video we'll briefly discuss it. But if you guys want another separate video on the data center proxies, make sure to comment down below and I'll surely make a video on it next. So the first company that we have is Schneider Electric India. So company is what? Company provides end-to-end infrastructure. It provides comprehensive data center infra, including racks, power cooling, and automation solution. Their role in data center includes power distribution, UPS and switchgear, precision cooling systems, and data center infrastructure management. And the company operates on a B2B model, and it has a global reach. As the name suggests, it is a global MNC. So it has a B2B model. They offer products, services, and digital designs. Notably, they have delivered prefabricated DC solutions to Indian parks, enabling modular deployment. And they have recent tie-ups with Capital Land, NetMagic, and ST Telemedia. And Schneider Electric, it is also a leader in green DCs, utilizing AI for energy optimization. So this is Schneider Electric. This is a proxy to data center as well as a proxy for power transmission theme. And now let's briefly understand some of the proxies. So first that we have is CG Power Industrial Solutions. We also covered this business as well. It provides transformers, switchgears, and UPS for power infrastructure. Next, Polycab or KA Industries. They supply essential fiber optic or LAN cables for connectivity. Then next we have is Blue Star. Blue Star offers precision HVAC and CRAC for optimal cooling. But Vertiv, that is a big company in the US that has the biggest market share in this liquid cooling solution. And then next we have Cummins India or Greaves Cotton. They deliver reliable gensets, ensuring 100% uptime. But what are some of the risks of this industry? So first is that it has high capital intensity. It requires very large upfront investments, and it has a long gestation period. Or it has a gestation period means what? Time basically to recover the cost that has been put in. Next is policy and regulatory sensitivity. Any changes in data localization, electricity tariffs, and zoning laws can impact profitability of different companies. Third, what we have is boom bust risk. So, overcapacity can lead to price wars in colocation or underutilization. So, as we discussed in the transform video as well, if there is a situation of oversupply, that can have a negative impact on the companies. Fourth, that we have is client concentration. Heavy reliance on a few large clients can be risky, as we saw in E2E networks, then black box, as well as in other companies as well. Fifth, we have execution risks, project delays, land acquisition hurdles, and technological failures can hurt returns. And also, one thing I want to say is that some of these companies can be trading at high multiples. So make sure to check its valuation. Make sure to compare it with 3 years and 5 years P. And if you guys want, I'll make another video on these companies. We'll do a P2P valuation analysis. We'll also discuss the results and which company can do well. So that was it from today from my end, guys. I hope you guys liked the video and found it informative. If you found it informative, hit that like button and also comment down below what companies you're keeping on your investment watch list. And make sure to share with your friends to further spread the knowledge, and I'll see you in the next video. Thank you.